We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return this video is smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with Bbig. It's in a pivotal moment. We're looking at it with 42 vision here. We're going to look at the data, what it's showing recently, and how things are looking for this chart moving forward based off my opinions. But before we dive into Bbig and all the data and the charts and what 42 vision is showing, I want to share with you guys the 2 home run opportunities I mentioned this morning over at the Discord, and that's something you can become part of. Check out the link down below, and we're going to get right into it here with Bbig. The home runs of the day were spectacular. What a great way to end the week, especially on a Friday. And after the S&P 500 index has been in a downward trend for the last week, I have managed to find daily at least one home run opportunity between the weekly watch list and the daily watch list. And if that's something that interests you, I would like to invite you to join us. Check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors all looking to learn and grow together. So EFTR was a home run I mentioned yesterday. SOS gave us 5 to 10%. And ENDP gave us a home run opportunity. Now we're going to look at that chart in just a moment. But before we do, I want to share with you guys here EFTR. EFTR was a home run yesterday. I was watching it in today's pre-market. And if it wasn't for 42 vision, which are the candlesticks that you see here, it's an indicator you can gain access to as well by joining the 42 vision tier level. But it allows me to see the dips and the rips and the transitions of an upward momentum or downward momentum. So if it wasn't for 42 vision, I wouldn't have made an opportunity out of this early on, because I don't like trading the pre-market, but I made something out of it because of 42 vision. Now these were the 2 opportunities I mentioned this morning that turned out to be spectacular. So SOS gave us nearly a 10% jump in the pre-market, pulled downwards, gave 5 to 8%, hit another bottom here, and took off for a 15% plus opportunity. And the home run of the day was ENDP. We caught this one as it was pulling downwards after running after the bell. And after pulling downwards, you could see there with 42 vision how it transitioned and how it had strength all the way up towards that highest point of 20% plus. If this is something that interests you and you want to become part of, check out the link down below, and we look forward to having you join us. Let's jump into these charts. So here we are with Bbig, and I want to start off by saying that the risk is super high at these levels, okay? And the first time I talked about Bbig was way back here on Friday, August 27th, when it was sitting in the $5 range before it took off and nearly doubled, hitting the 10s, pulling back down to the 5s, creating a second opportunity, and it doubled again, hitting the 11s, almost $12 range, fell down to the 7s, and then now it popped up, fell down to the 9s, and it's trying to pop up again, and it's going into further weakness. That right there had a lot of people today a little bit concerned in a different perspective when it comes to Bbig, because one of the biggest things that has driven a lot of investors to stay tuned on in to see what's going to happen because of the speculation that this could reach $15 to $20 if it squeezes again at these levels is because of the failed to delivered shares. Because utilization, yes, it's high, it's almost 100%, but short interest has gone down, which means some covering has happened, and that's why we've seen this whole entire move, because this would not happen alone because retail's buying. These spikes that we've seen is the shorts covering, specifically this one right here recently and this one right here. This is shorts covering. Anybody that wants to say it is not, the short data shows you it, because as days to cover get less and less, the faster the shorts can cover, which doesn't really put much pressure on them. And we're going to look at this together, because this right here was 0.38. They haven't even upgraded here the information, or better said, updated, of the short float, right? Which used to be 50%. Then it went down to the 40s. And then I assumed as we saw this go higher as the days went on, it was around 20 to 30%. And it did reach those levels. And it's currently at 27 based off this source here. And the borrow fee rate just keeps on going higher, which makes people think, well, if the borrow fee rate is going higher, shorts have to cover eventually. Well, 30% of the shorts already have covered that were actually shorts from way down here. This is what I've talked about, the shorts from down here and the shorts from around here. a lot of the utilization that you see now are probably shorts buying back up here, hoping or at least trying to put pressure to bring it down here. They're expecting that the bulls are going to get exhausted and stop fighting for it to go higher. And the only ones that will just go ahead and hand it right back to the bears in the shorts is the bulls themselves, taking profits that have been in since way down here, the $5 mark, $7 mark, and even those that have gone up here around 10 and taking profits from that small 10 to 20% jump. So it's super important to be aware of that. So when we jump back over here, yes, borrow fee rate is going higher, and the short squeeze score here is 98.27, which is pretty high. But the days to cover, guys, this has gone down dramatically. This used to be at 0.38. It went down to the 0.2s, went down to the 0.14s, 1.5, and now we're at 0.07. The lower this goes, the easier and more accessible, right, it is for shorts to cover, and it doesn't put as much pressure on them to make this actually squeeze higher. Because when the days to cover are higher, that's how this happens, okay? Jumps from $2 all the way up to $10, and jumps from $5 all the way to $10 again, because the days to cover is higher, and it makes them not have as much access to go ahead and just flip-flop right away. So the lower it goes, the less pressure they feel, honestly. And it seems kind of like counterintuitive, like the days to cover is lower. You would think that in 0.7 means that, you know, they have to cover even faster. No, it just makes it easier to cover. So they can just like flip-flop within their own positions and then just get back into a short position again. Like give it back and then grab it. And this has gone up. Yesterday I shared with the community that it went from 0 to 3,000, and short shares availability now is 80,000. This means that within everything that we're seeing right now happen, there is covering happening. It's just not squeezing to the effect that we saw when it was at $2, $5, and so forth. That's why these moves have happened here from 9 to 11, and the short squeezes, quote unquote, become weaker and weaker over time. This was the best moment, if I'm honest. This one was the second best. This was the third best. Now people are hoping for the fourth best, right? But it has to break through 1250, which is possible. We'll have to see. But the higher this is, the less room there is to even go to the upside. It could go crazy to the upside because buying pressure and excitement, and the only thing that can create that buying pressure and excitement to retail investors or institutional investors is the float, guys. This is showing right here 35 million. The share float, that's the outstanding, but the share float is usually a little bit less than that, and that can create that upward pressure even further if buying volume comes in, like apart from a short squeeze possibility, right? And then also it going higher could force a few of the new shorts or even the older shorts that haven't covered because they're hoping this can just go right back down, are the ones that would possibly go ahead and have to put in that pressure and then push it up even higher, and it may break 1250, go towards 15, maybe 20 as people are speculating. But the likelihood of that is a lot less than it actually just sitting sideways or trying to fight to hit 12, then come back down, probably break a little bit above it, not even reach 15, come right back down, and then go into weakness eventually as the shorts continue to put the pressure and the bulls actually give up, because there's always that point where the bulls end up giving up on their own. It's just they get bored of waiting, they want things to move quick, or they saw what happened before and they're hoping it's going to happen at these levels, and it's just not the same. So super important to be aware that short shares availability has gone from 0 to 80,000 from yesterday to today. So some of the shorts are covering, and on top of that, as utilization continues to stay the same and days to cover is going lower and lower, that means that utilization is being covered and then retracted and re-bought out, or at least re-borrowed, even though the fee rate is tremendously high. I don't know why they would do that, but they're still doing it. And their goal is to eventually see this go from either $11, $15, $20, wherever it goes to at these highs that it may reach, and then just go right back down towards $2 or $5. And they're going to maximize on their positions and their thoughts. But I mean, one of the biggest things that I'm seeing here so far is the bulls are holding this up pretty strong. And as long as they stay above this low here of the day, 1067, that's a good sign of strength. You could see here with 42 vision how things are looking on the 30 minute. It actually has some strength of a reversal here. And if it breaks through 1065, then the next point of reference I would watch, which is the lowest point that we've seen in the last 3 days, is 962. That's going to be a pivotal number because that could mean further weakness. And then you would have to watch between 962 and all the way down at 778, 780 range to just round that up. So on the 30 minute, it's showing strength. On the 1 day, things just continue to go in that upside momentum, and it hasn't really transitioned. The only time it transitioned was from 11 to 8 to all the way down to 6, and it reversed back upwards. Hasn't transitioned, just continuing with that strength. And when you go ahead and zoom in a little bit more, right to the 15 minute, you can see that there was weakness in the day, and there's a reversal forming here. And if this can continue that pattern, this might push back up towards 11, maybe 1170, but the true goal is to break through 1250, and eventually more shorts will actually have to cover, and it could push this up even higher. As always, thank you guys so much for watching, and let's make some money.